Kenya's first quarter GDP coming in at 5.2%. That's up from 3.9% in the first quarter of last year. Meanwhile, the country's inflation rate also quickening. That's to 4.91% in the year to June from 4.05% the previous month. The food and non-alcoholic drinks index increased by 0.18% from the previous month, driven by jumps in the prices for cabbages, carrots and potatoes. So let's get into these two numbers today. I'm joined on the line by James Gatutu, Production Statistics Director at the Kenya National Bureau of Statistics. James, thanks for joining us. So let's start off on that inflation print, because that has surprised some economists with that increase there almost to 5%. Just take us through once again some of the underlying factors right now which came through as surprises this time around.
Thank you very much. The inflation, as you heard, was this month is 4.91 from 4.05 last month.
Yeah.
The main contributors of this inflation is mainly the resultant of the increment and decline in the prices of food products, which had a net effect of 0.18% over the last month. And we tried in our analysis that most of the energy prices went down, the fuel products went down, as well as electricity. The other contributing factor was also the base effect. We had a low basis in the same month of the previous year.
Yep. Sorry, James, it is a bit of a bad line there, but if we could just get into the food side of things, because if you're looking at food for this month, only up 0.18% month on month, but it's up 13% if you compare it to this time last year in June. So what is the direction for food prices at a time of year where we were in fact expecting muted prices or price growth on that side of the equation?
As I mentioned, you find most of the products actually recorded decline, but the resultant effect was that we had an increment in inflation, which is as a result mainly of the base effect. We had a lower basis in the same month previous year.